Well, the D-Day is upon us, the day of the Union Budget, and hours from now, the Finance Minister Nirmala Sitharaman will be tabling the Finance Budget and the Union Budget 2023 in the Parliament. What can she really deliver to propel us towards the $5 trillion economy mark? And what could be the agenda to make us leap forward? Let's try and understand that. Nikunj, the context of this budget is also very critical, right? The market positioning is a tad bit light, plus given the fact that in the last couple of years, the focus of the government was different, right? In 2020, it was about surviving, then came a bit of recovering phase, it was about surviving that moment, and now is the time that we can probably think about thriving and flourishing, right? Yeah. What do you think the government can really do?
Firstly, good morning. It's an important day. It's a big day. Anisha, you're absolutely right. Let's put things into piece. 2020, what was the need of the hour? Save the country from pandemic. So we are using the word survive. And that's where all the vaccine grants and all the other things which were denominated towards healthcare, they occupied the front stage. Then came the revive. So economy survived, and then you have to revive it. And then from survive, revive, you go to thrive.
Correct.
You will thrive because the global backdrop is currently favoring you. There is a huge problem in the Western world. They are fighting with inflation. If not inflation, they are worried about recession. Energy prices have gone haywire. Productivity levels are dropping. Population is aging. China +1. So sometimes sometimes the backdrop is so strong and supportive that you are the standout economy, and you are the standout economy. Now that we've established you're a standout economy, what will government do? They will have to ensure that we take a leap forward. And that is what the theme of 18 of this year is, that how do you take a leap forward? How do you take a leap forward? First, you take a leap forward by focusing on growth. Second, you take a leap forward by maintaining continuity. Third, you take a leap forward by enabling. These are only three measures you can do.
Right.
Growth, ensure that you continue to support infrastructure, you continue to support the multiplier effect, you control the leakages. Excellent things have happened there. Then you look at the enabling part, more PLI schemes, you enable the government or you enable the business, you enable the ease of doing business. And then somewhere you have to also take care of the political compulsions. Rural India has not done very well. That part of the economy, because of inflation and what's happened, has struggled. How do you take care of it? And then the consolidation. Whatever you're doing has to be done in a prescribed formula that you control the fiscal deficit. So the first for any budget it is consolidation. That's the first C. Second, I would say capex or capital expenditure. Third is consumption, which is very important in terms of enabling it. So those are the three C's which I think for me are important for this budget.
So those three C's are important, but as you talked about, rural recovery has been a tad bit slow, and given this is the last budget, full budget of the government before the elections in 2024, do you expect this to be a tad bit more populist? Do you expect fiscal deficit maybe on the bit of a higher side? How does the math work out?
See, I'll tell you what markets are working with. It's all about working with market expectations. Markets are of the view that this year fiscal deficit number will be lower than what the government had projected for FY23 because you got a huge buoyancy in taxes.
Right.
The taxes what you calculated at the beginning of the year, they were conservative. On a conservative base, the room to get positively surprised, I think, has happened. So I think that in a sense sets the tone, and this is a big departure for the budget because unlike last year or unlike previous budgets of the previous regimes, assumptions were always tall, and then you suddenly met with some disappointment, and when you had to meet your fiscal deficit target, you had all kind of crazy taxes here and there which were slapped in. I don't think anything of that sort is going to happen next year, given that, and I'm assuming, and there's again an assumption that you will have less subsidies. You had two major subsidies this year: food subsidies, which you were giving out free anaj, and then you had
fertilizer subsidy.
That's largely because of war that's happened. Then RBI, which is going to be sitting on a fat advantage because of what's happened into their balance sheet because of the rupee depreciation. So it's like saying that the government this year is starting with an opening bank balance, which is actually about 2,50,000 crore. That's the opening bank balance. Imagine if you're opening with a bank balance, your chances of actually keeping the fiscal deficit under control as the economy grows. And to make it simply for our viewers, fiscal deficit is always economy, the numerator and the denominator. The denominator, which is size of the economy, which is going to grow, your fiscal deficit will come under control because your expenditure, because you have an opening balance, will be strong. So I think fiscal deficit will be managed.
If you like this video, then like, share and subscribe to ET Now.